If you're working from home, there are some changes you need to know about in terms of what you can claim due to COVID-19. I'm Sam Keats from Keats Accounting, and this week I'm going to talk to you about home office expenses. So people have been claiming home office expenses for a very long time, and it's a system that has worked very well. Typically for most of our clients, there's a number of steps that would be taken. So for things like stationery and those sorts of things where you have the receipts, we would make a claim for those. We would make a claim for your internet based on a time diary. So for 4 weeks, you would keep track of all the household internet time and the time that is you using it for work, which gives us a business-related percentage. And then you'd also keep a diary for 4 weeks of the time you physically spend working from home. And the tax office gives us a standard rate that we can claim for your gas and electricity. So all of those things would be claimed as other work expenses in your tax return. However, in response to COVID-19 and the changes that have meant a lot more people are working from home, the tax office decided to simplify matters, as they say. Not convinced it's actually going to save you any money, but I'm going to explain to you how it works because we're getting a lot of questions. So essentially, they have increased the rate at which you can claim home office expenses. They've lifted that almost 50%. Now, the devil's in the detail as always, because unfortunately it's not as good as it sounds. It's not just an uplift of the rate that you can claim for your gas, your electricity, your cleaning, and depreciation on your standard office furniture, which was what was covered under the old rules. This covers everything. So you can't then separately make a claim for stationery and printer ink and paper. You can't make a separate claim for your internet use. So for people who haven't kept good records, it will give them an opportunity to claim some things that they wouldn't have otherwise been able to claim. However, if you've been diligent about your receipts and your time diaries, our modelling is showing that this is actually going to result in a lower claim for most of our clients. So when we come to do your tax return this year, we're going to be asking for a higher level of detail so that we can make sure that you are claiming the absolute maximum and you're getting the most tax back that you can. So there's a little bit more work involved for us in terms of figuring out what you can claim. We're going to have to ask you for a lot more receipts so that we can figure out what period things fall into, because this change is only going to apply for March to June. So for the period before that, old rules still apply. A little bit complicated to work out your home office this year, but as always, we will get you the highest claim that we can. Just be prepared for some extra questions at tax time so that we can maximise your deductions. That's all for now, and I'll see you next week.